I think at this point we're all very familiar with Vanguard ETFs, such as VOO and VGT. And then of course there's also the very popular Schwab ETFs that I'm sure we've all heard of by now, like SCHD and SCHG. But I feel like the Fidelity ETFs are kind of the underdog in this case, and in my opinion are often overlooked, but still very underappreciated. So today we're going to go over the top 3 Fidelity ETFs and kind of compare them to the more popular Vanguard or Schwab ETFs. With that being said, the first one is the Fidelity MSCI Information Technology ETF, or FTech. This one's going to be very comparable to Vanguard's VGT, with of course a few slight differences. So just like VGT, this ETF invests in stocks of companies in the information technology sector and holds some of the largest tech stocks in the S&P 500. It has just under 300 different holdings in its portfolio, with about 50% weighting in Apple, Nvidia, Microsoft, and Broadcom. So despite having so many different holdings, it's extremely concentrated in just those top 4 holdings. Now, the small difference between FTech and VGT is that FTech has a very slightly lower expense ratio at 0.08% compared to VGT's expense ratio at 0.1%, so very minimal. FTech is also a lot smaller of a fund with an AUM of 12.5 billion compared to VGT at 91 billion. Now, when it comes to the returns, the charts are so similar that you can hardly tell there are 2 here. But if you look closely, you can see that FTech has a nearly 1% higher return on the 3-year time frame, with VGT having a return of just under 45% and FTech having a return of just under 46%. Now, it's obviously up to you to decide, but FTech might just be a slightly better technology ETF than VGT. But again, they're so similar that there's hardly much of a difference. Which brings me to the next one, which is FDVV, or the Fidelity High Dividend ETF. Now, this one to me is actually kind of interesting because it's quite literally called a high dividend ETF, but its current yield is only 2.73%. And if you ask me, I wouldn't say that's a very high dividend yield, but that can be up for debate. What I really like about this ETF is that it's fairly low risk, but still a very high quality fund. If we jump into the holdings, you'll still notice there are those Mag 7 stocks like Nvidia, Apple, Microsoft, and Broadcom, but in the mix, you'll see other blue chip, high quality dividend paying companies. Now, we could compare this one to Vanguard's VYM, but of course by doing that, we will find some differences between these 2 funds. One of the main and noticeable differences is that VYM has a lot lower of an expense ratio at 0.06% as opposed to the expense ratio of FDVV at 0.15%. So over time, you are going to be saving a little bit more in fees by choosing VYM. Now, both funds do have about the same dividend yield. They're both currently just under 3%. But when it comes to the total return, FDVV has completely outpaced VYM over the 3-year time frame, bringing its total 3-year return to just under 46%. And again, with it being a Fidelity ETF, it's going to be a lot smaller than any other Vanguard ETF. So its current total assets under management is only 3.9 billion, as opposed to the total assets of VYM at 73 billion. Now, this last Fidelity ETF that I wanted to talk about today is actually very similar to Schwab's SCHG. It's called FBCG, or the Fidelity Blue Chip Growth ETF. Now, hence the name, it's going to be holding a lot of those big name, fast-growing technology companies like Nvidia, Apple, Amazon, Microsoft, Google, and Meta, with 63% weighting in the top holdings. So another one that's very concentrated on those top 5 or 10. It's also a fairly new fund. Its inception was in June of 2020, so only just a couple years old at this point, but it's had a very impressive total return since its inception of 117%. Now, one thing to keep in mind with an ETF like FBCG is that its expense ratio is fairly high, especially comparing it to SCHG. It's at 0.59% as opposed to 0.04% for SCHG. So a huge difference in fees there, but again, that might not matter to you because at least on the 1-year time frame, FBCG is beating out SCHG in terms of growth, but on the 3-year time frame, SCHG does come out on top. But remember, FBCG is still fairly new, so there is potential for it to beat out SCHG in the long term. Quick side note, as I was making this video, I realized that these ETFs might not actually be offered on certain brokerages. So I checked on Robinhood, the platform that I use, and found that you are able to buy and own them on Robinhood, but I would double check with your brokerage to see if they are available to trade. So it really is up to you to decide whether or not you think these Fidelity ETFs would be better holdings in your portfolio than the more popular Vanguard or Schwab ETFs. So let me know in the comments below what you guys think of these 3 Fidelity ETFs, and I will see you next time.